This meeting today is actually to prep us for our upcoming budgeting and investing meeting for my financial planning clients. Of course, for those of you who haven't had a chance to meet, if this was forwarded to you by one of my clients, my name is Todd Dolshaw with Elevated Retirement Solutions. Worked in the finance industry for 18 years as a certified financial planner and excited to share these resources here with you. And I really hope that you get the most out of our session today and enjoy the meeting. So with that, we'll go ahead and get started. Okay, so what we're going to be discussing today is what separates the financially independent investors from those who aren't pursuing their full potential, right? Emphasis on pursuing versus achieving, right? Of course, we're going to also discuss strategies and tools to help manage your cash flow, really reframing about how we think about income, and then some actionable next steps with examples. So I'm very excited for our discussion here today. Okay, so to turn budgeting on its head here a little bit, budgeting brings up a lot of negative emotions for people because they think about it as a tool to restrict them from bringing them joy, right? Delay gratification, so on and so forth, pension your pennies, and other concepts that have been discussed. But really, my professional opinion is really budgeting isn't about restriction, but it actually creates freedom because when you are have a disciplined plan that's flexible and realistic, then when you do spend money on yourself for trips and travel, you don't feel guilty that you're overspending and can actually enjoy your vacation. Conversely, you know that you're doing a good job saving and you know that you've hit your and are working towards your full goals and your potential financially in terms of retirement, buying a house, business, etc. And you've allocated those allocations appropriately there. So really the key there is really wealthy people tell the money where they want to go through intention and action. Not they don't wonder where it went. So it's all about intention and being proactive and being more positive at the end of the day. Because what we focus on expands, and if we focus on the positive things, then those have the potential to expand as well, just as our money does. And really, the goal is to make your money a tool that works for your values in your future, which is really critical. So the money mindset. So ultimately, some ways around this really are really important because when it comes to money and our mindset, the question is, what were those discussions like when you were a child growing up in your household, right? Were conversations around money very easy, very supportive, educational, academic, or were like a lot of people where they were very stressful growing up in a situation where parents might have thought about money or as a sense of stress about the markets, budgeting, we never have enough, etc. Those are all very common things that I hear and frankly I've experienced as well that are very normal and natural, right? So having a positive mindset and attitude towards your money ultimately is one of the most important aspects that I see that's missing in individuals that aren't really achieving their full potential. And when we expect bad things to happen and we plan for rainy days, well, guess what? That's what we end up getting more of, right? So how do you feel about budgeting? What does financial independence mean to you? And I love this quote by Mark Twain. It ain't what you know that gets you into trouble. It's what you know for sure that just ain't so. So couldn't have said it better myself from the great Mark Twain. And again, your mindset creates your attitude creates your behavior, which creates your actions, and then success or lack thereof. And success, of course, can only be defined by you. When it comes to this, one thing that we're also going to be discussing in our upcoming meeting in terms of budgeting is what are your core values, right? Because ultimately, the budget manifestation is really just a manifestation of what is it that you want to achieve, and what are your values, and that's your why. So, is it independence? Is it family, freedom, generosity, fun, etc.? And ask yourself if every dollar supported your values, how would that make you feel, right? And again, not saying that we have to pinch our pennies and never spending money ourselves. In fact, I would usually advise the opposite, right? But if every dollar was set and intended the direction that it was supposed to go for your values, how incredible would that make you feel, right? And anchor the budget to what matters most to you. And I love this quote from Walt Disney: when the values are clear, decisions are easy. Okay, so positive visualization here. One thing that I've noticed since coming into the business in 2007 and then full-time in 2008 during the major recession, especially in finance, is attitudes and emotions really go up and down on a daily or even hourly basis, much like the stock market, right? So what we need to do is try to be more positive with when we think about visualization, right? Expecting that good things are going to happen. The markets are going to go up, your investment accounts are going to go up, you're going to achieve all of your goals, have a great budget, and you're going to live a life that's fulfilled and helping you hit your values. So don't, again, like I said, to reiterate this point, I don't want to hear my clients saying that they're saving for a rainy day. What I want to discuss with you is let's save for a fun and a joyous day, right? And the framework that we want to think about as well in terms of this is starting first with being the successful person that you want to be, then you do the things that you want to do, and then you'll have what you want to have, right? Not do, then you'll have, and then maybe you'll get what you want, right? So ultimately, again, it's about being the person that you want to be, whether that's retiring at 55, whatever your financial goals are, which we'll work on with you. You do the actions that you need to do, and then you'll have your level of success. And of course, with this, again, tying it back to financial peace, what does that mean to you? What does that look like? What are some three things that you want to be doing or funding in the next 5 to 10 years? That'll be a really fun discussion to have with you. And then we're going to align your vision with your actions. And the great Michael Jordan from Chicago Bulls, of course, said you must expect great things of yourself before you can do them. So think about that in terms of our financial plan that we're working on. You must expect great things and you're going to achieve your goals before that becomes a reality or possible. Okay, so digging into some of the technical aspects of this, now we're going to transition towards current cash flows. So as you may expect, it's hard to talk about budgeting without looking at cash flows. So some key categories here are income sources. That could be your W-2 income, K-1 if there's a business, right? Investment income sources, etc. More on that later. And then your fixed expenses, right? So this could be mortgage, rent, utilities, insurance, the things that we have to pay no matter what, right? And then the next down here is going to be your variable expenses, right? So these are the things that we still need to do, right? We still need to eat, literally, go to the grocery store, go out for dining with friends socially, spouses, significant others, I would argue too, for our own mental health and romantic health or otherwise. But those are things that we can control more or less, right? We don't have to go out to eat every single day, every night, right? Just like we don't have to sit at home and have groceries every single day from the cheapest grocery store. That's going to fill you potentially with things that aren't good for you nutritiously, right? So again, having a balance is really critical with this, and that's something that we're going to work on breaking down with you. Okay. So next is your discretionary expenses. So this is where we get into the fun things. So this could be travel, subscriptions, right? Professional development, and really the extras at the end of the day that you can live without, right? Think about this as the dessert that goes with the main course here, right? And obviously, of course, saving and investing. Very difficult to achieve financial success over a consistent period of time if we're not saving and investing to get your money the opportunity to potentially work as hard as it can for you. And then strategically paying down your debts. And the great Warren Buffett said, do not save what is left after spending, but spend what is left after saving, which falls in line with the profit first mentality. Okay, so breaking this down here a little bit more now in terms of income. So ultimately, some of us may have more flexibility than others to drive our own our income, but we're going to work on diversifying your income sources and really setting you up so that by the time you do retire, if you haven't already, or if you are in that process, that we're working towards diversifying your income sources to match your financial plan, your tax situation, etc. And again, with this, what I will say is that all these different sources have pros and cons in terms of stability, risk, potential, taxes, etc. So keep that in mind as we're talking about these. Okay, so the main categories of income are active income and then passive income. So active income is where we have to work in a job career, business, etc., that can't operate without you in order to generate consistent income. And if we don't do it, it's kind of like not watering your plants, right? Eventually they'll won't get enough water, they'll start to suffocate, and then they'll die and wither away, right? So active working income doesn't exist without you doing something. Whereas passive income, of course, is the opposite, right? So that could be owning a business that can operate without you, which, by the way, when you own stocks in the stock market, that's exactly what you're doing, right? If you own the S&P 500, Apple, Amazon, Nvidia, etc., those are businesses that clearly can operate without you, right? But you do own them as a business owner, right? So that's pretty incredible. Real estate income, of course, if you have whether it's properties on a residential site, commercial, otherwise, the idea there is that you're trading a principal lump sum investment. Sometimes that's paid cash, right? Sometimes you take out a mortgage, etc. And then you're getting the income coming in potentially from a tenant or tenants in the form of rental income. Municipal bond income as well as another great source. So municipal bond income there. Beautiful thing here is the way that that works. Oftentimes is that's not subject to federal income taxes up until the AMT or alternative minimum tax bracket. So we want to be careful that we don't shift too much of your income from investments such as non-qualified accounts into this. But for those of you who I've worked with in the past, right, you probably know that I'm a big fan of municipal bond income. If you hold the investments for more than 12 months, then that could be potentially federal income tax free. And if you do typically pay taxes at a state level, but as we know, some states don't even have state income taxes, while others, it's a fraction of what the federal income tax gradual rate is and would be. Qualified dividend income, that's another income source. So qualified dividend income, that's when you own dividends inside a non-qualified account that you hold for more than 12 months. With that, if you were to take that income and sell it within 12 months, then that creates ordinary income, which is what we don't want, and potentially short-term gains and/or losses that are disallowed. So when in doubt, all things being equal, probably want to hold on to your investments for 12 months or longer when inside non-qualified accounts. That way you can take advantage of that qualified dividend income tax benefit there. I will make a note as well, if you hold dividends like this inside IRAs, Roth IRAs, 401ks, 403bs, cash balance pension plans, etc. Those don't get taxed to you each year, right? So it doesn't matter what's inside those investments as long as it doesn't disallow the trust. That is the nature of a 401k, a Roth IRA, etc. However, once you pull those funds out, then at that point in time, if it's tax deferred, then you pay the taxes, ordinary income, state and federal, regardless of how it's set up. That's why the non-qualified account can be a great option there. And by the way, that's also why we like to supplement and focus a lot on Roth IRAs and Roth conversions. Another option here for passive income is K1s, right? And this is more or less a hybrid sometimes that can be passive or active. So K1s oftentimes are very popular in S corporations, that's S for Sam, because of that ability to control the tax picture, send out W-2s to active managers, the employees, etc. And then the owners can benefit in the profits of the business via K1 in a tax bracket that's similar to qualified dividend income, where you don't have to pay for FICA taxes, including Social Security, so on and so forth. And the tax bracket for K1s is typically a lot lower than the W-2. And you also don't have to worry about payroll taxes as well. A little bit beyond the scope probably of this discussion to get into those level of weeds and details. And what I will say, when in doubt, feel free to reach out to me with any questions on this. And for actual tax strategies and implementation, please coordinate with an accountant or a CPA. And like we were talking about before, again, long-term, long-term, long-term. So 12 months or longer is what you need to have long-term gains or losses. So said differently, if you have a long-term capital gain and you sell that after it's been held for more than 12 months, rather than paying that tax at ordinary income, which is what would happen if you sold it for less than 12 months, then you get to have that at your capital gains tax bracket, which is typically a lot less than your ordinary income. Conversely, let's say you have a number of investments that are very aggressive and you have a loss in your portfolio. And come year end, you might hear about a tax strategy called tax loss harvesting. Tax loss harvesting is where we pick out those individual stocks, bonds, whatever that might be, sell them intentionally for a loss when you've held them for more than 12 months. That way we can write off those losses against any gains. And then you can even write that off against your ordinary income, typically as what's called an above the line tax write-off. And above the line tax write-offs are huge because that means you can write those off regardless of whether you take the standard deduction or the itemized. So again, it flows income from all these various sources, right? So that's your adjusted gross income and then standard and itemized, right? So we want deductions up at the top end of your personal income tax return and business return, because ultimately those are the things that you might be able to write off regardless, whether you take the standard or the itemized deduction. So again, for more details, please reach out to me, have a conversation, and coordinate with your accountant and tax professional. Okay. Another source of passive income is retirement distributions, right? This is why many of us save into our work, 401k plan, right? 403b, IRAs, Roth IRAs, etc. So with that, most of the time you have to wait until 59 and a half in order to be able to pull out those funds. And sometimes you're able to pull out at age 55 for employer-sponsored retirement plans, especially government plans. Long-term incentive plans are another one as well. So ultimately, there's a lot of different ways that you can generate income for yourself. And typically the one that most people focus on when we talk about income is your working job, right? And as you can see, that's just one very small bullet point in a whole list and see here of these. But usually when someone's starting out, hard to create all these passive income streams until we have a good working income that we can work with. We save in a disciplined investing way, plan through our budgeting exercises so that eventually we get to a point where your passive income could potentially and hopefully eventually will exceed your active income. Okay, so with that, just to reiterate this point, again, passive income aims to create financial freedom, right? I doubt very many of us were taught when we were young to go out and create passive income for ourselves so we can choose whether we want to work or not. Usually, many of us were told, myself included, right, from society and people who really wanted the best for me and others, is if you want money, go out and get a job, right? But then the question is, okay, well, what do you do with that money from that job? What do you do with that money from that career? How do you plan for this? How do you create a situation where you can have income streams coming in no matter whether you're working or not, whether you choose to, or there's an accident like a disability or a life crisis or otherwise. So really to live a life of your potential financial freedom, you may want to consider shifting more and more of your income towards some of those passive income sources than active income, because I can tell you, all things being equal, oftentimes the passive income sources could be taxed at a better rate than active income sources, especially when we figure in payroll taxes, FICA, etc., all of which are important aspects because we want to make sure that we're getting enough income so that you can truly try to max out your Social Security benefits, which is a whole different discussion in of itself. But again, with this, when you have a lot of different options, that creates choices. And that's really the whole point of financial planning, right? It's just to give you options with your resources. Okay, so spotting opportunities. So here's where we can just do a quick self-assessment as we're getting ready for our meeting here coming up. So are you happy with how your money is being used? Maybe score yourself 1 out of 10, 10 being happiest, 1 being the opposite. Where are you spending out of habit or emotion, right? Or there's impulse purchases or late night shopping sprees potentially that you may be thinking about, right? That's okay. Everybody has, usually something there. And it's very rare to have somebody who has a perfect handle on all this because we are human, right? And there's emotions that are going to come through us, right? But the idea is that we want to have a plan and a budget that's flexible for this to account for the fact that sometimes we need dessert in our diet, right? And then how can we reallocate this to align better with our values? Again, sound like a broken record, but positivity is critical. And when we take actions that are in alignment with our values, oftentimes that is what helps us move forward. And that's when we take actions that are not in alignment with our values. That's where stress comes into play. There's shaming, there's victim mentality, and self-sabotaging that oftentimes can get in the way of us achieving our full potential. So some examples for getting small wins is considering just automating your savings, right? So the beauty of having, if you have a retirement plan through work, is that's what they do for you through payroll deferrals, right? You can save into a 401k at a certain percentage or dollar amount of your income or paycheck, respectively, and that's just set aside automatically for you. So why not automate that? And let's, consider setting aside, an example of say 300 a month for a play account where we can travel and go out to eat and socialize and do the fun things that you want to do, right? Maybe reduce expenses that don't align with your values by, for example, $200 a month to find that money, right? Consider having a monthly meeting to check in with someone who can help you, hold you accountable and give you some great insights. So if you have a mentor, in addition to me, right, definitely would suggest using me as that resource financially, but also talk with other people, right? I encourage people to talk with lots of other people, other advisors, different walks of life, et cetera, because they're going to have different perspectives than I do and vice versa. And I'm in this to ultimately help my clients and certainly know that I don't have a corner in the market for good ideas and vice versa, right? And if you are in a relationship, right, married or otherwise, hard to really make a significant and consistent movement on your budget without getting buy-in and input from your spouse or otherwise. There's also really nice apps that are out there now thanks to technology, and this is just continuing to explode now with AI, right? But let technology do the hard work for you of categorizing your expenses, right, and your income sources, right? Contribute to a non-qualified account potentially as another option, and track how much passive income you get back to your bank to pay your bills. And that's a concept that we're going to talk about in our meeting. Is one of the things that you can do with a non-qualified account that I'm managing for you is if we set it up this way, rather than having those dividends, coupon payments, et cetera, get reinvested back into the portfolio, we can actually have that get kicked back to your bank. So you basically can become your own bank where you set it up, save, and then have those dividends and that income sent back to you. So that's a pretty incredible way to build your net worth and passive income that we don't need to wait until you retire. And then as well, something that we've talked about is the idea of a Pounce Money account, right? So consider contributing to a Pounce Money account to fund future investments where it can be really aggressive. And I love this quote by Sheryl Sandberg: done is better than perfect, right? So perfection is the enemy of success, right? So ultimately, action beats inaction most times. Okay. So in terms of accountability and support, when we think about this after our budgeting meeting, I would suggest that we have some sort of a 30-day check-in, right? Whether that's with me or another mentor or otherwise, just to debrief after our discussion so that you feel really good about our conversation and that you're ultimately following through on the things that you wanted to follow through. And then we scrape away the things that we don't actually want to follow through so that it's a manageable list. Consider tools and support. There's budget tracking apps such as You Need a Budget, Monarch, Tiller, Simplify, and many, many, many more. And just email me your plan and your progress, right? That's what I'm here for as your financial advisor if I'm working with you, which is, of course, the whole point of this video. That's what I'm here for. So I'd love to hear your success, things that you might be struggling with, right? Whether that's the finances, the mindset around this, because ultimately the money and the mindset do go hand in hand together in order for you to reach your full potential there. Okay, so some next steps to consider here is to write down and review your values if you haven't already. So, and then consider how that lines up with your current budget. Identify 1 to 3 changes that you want to consider, and then schedule a final call accountability meeting with me, or if you happen to be visiting this website otherwise, talk to your other financial mentor, right, or other mentors, right? Begin tracking your progress, and then start setting up automated savings for passive income, Pounce Money, right? Extra savings on high interest debt that you can pay off a lot faster, and then stop saving for a rainy day, but save for a joyous day. So again, positivity and what we focus on expands. So why not focus on the positive things? So closing thought that I'll leave you with here is your money should reflect your purpose, and budgeting isn't about restriction. It's really the roadmap for your life that can help you reach your full potential. So with that, I want to say thank you so much for watching the video today in preparation for our budgeting and investing discussion here in planning meeting. I'm very excited to dive into these topics with you, and hopefully that you found this video very helpful, educational, and great prep for our upcoming meeting. Thank you.